Welcome everyone to another CoinDesk seminar. Today we bring this seminar very well timed, and I'll get to that in a moment, why it's so well timed. Today it's all about why layer 2 will change the game for Ethereum. And the context really is that the future is here. There's been a world of new applications that you don't even need to explain to people anymore. NFTs seem intuitive, DeFi seems like everyone's doing it, and all kinds of new demand for transaction types and relationships formed on blockchains, commercial relationships formed, secured, negotiated in some cases on blockchains. And the ability for these trends to change the game has become more apparent than ever. However, all of this energy towards scaling and delivering on all the promises a lot of blockchain folks have said for years, we're here now. And that's why the timing is so interesting. So with all these new transaction types, with all these new secure forms of relationships being established, we still have a world where we don't exactly know what future will be the right one for scaling and which solutions will be adopted and which ones will work. And that's why this week, this whole context of change the game becomes really interesting. Vitalik Buterin, who is the founder of Ethereum, just came out with a great piece called The Endgame, really about the last design decisions that are required to get to this billion daily user system where we can actually onboard 1 billion users who make 1 billion transactions individually in a day. And those engineering decisions that are made will really become the blueprint for everyone to copy. So it's the last few design decisions that we're looking at here in order to deliver this future. And with that, right, we've got all kinds of people still debating. Maybe some of these solutions are a dead end. Maybe these ones are the right way forward. But in this document and in the sessions today, we're going to take a look at some of these choices, these final choices that will be made to deliver the full promise of blockchains, and find out which of these design choices are going to persist, which ones are going to add to the entire goal of decentralized systems that people can use to leverage their own talents, their own abilities, and be able to have secure relationships with all kinds of users. So the change in the game really is about this end game idea, right? The last design decisions that will allow the full vision that most folks have been able to ideate on for the past few years. So the first talk we have today is really just about L2 innovation in general. And we've got Hasib, who's a managing partner in the Dragonfly Capital, and he wrote a tremendous article this summer, which I had the pleasure of reading. And I think it brings a great context here, which is this idea that nobody will care about rollups. And that's really what we're talking about here. Remember, these are the last design decisions that can bring us to the 1 billion daily users. We're talking about the convergence of designers and engineers that will learn from these final design decisions and be able to deliver these products and services. So when Hasib wrote about that, he's saying, perhaps there are other avenues that will just be shorter and will bring us to that 1 billion daily user piece. So joining Hasib will be Peter, who is a founder and researcher at L2Beat, which is a really new data site, really neat new data site that I've had a chance to look at it, really talking about how these layer 2s above Ethereum are generating interest, generating activity, and how they're being used to secure these relationships and how they'll help bring us to that 1 billion user a day threshold that sort of is a psychological threshold, but a really important one nevertheless. Peter, welcome. And finally, we have got Agne, who is the host of the L2 show. So a show focused on these issues, and she'll be hosting this session between these great guests. Really, once again, talking about these design decisions and all the benefits that are available with every one of these decisions, and we'll be able to see exactly what we have to be excited about and what these transformations might look like. So welcome, everyone. And I'll hand the mic over to Agne first, who is going to be running this conversation. Thanks, everyone. I hope it's useful.
Thank you very much, Nolan. Hello, everyone, and welcome to this Layer 2 seminar. I'm very pleased to have Haseeb and Piotr on this panel. I think it will be a very exciting discussion. So let's start from what Nolan has mentioned, the last piece by Vitalik Buterin called Endgame. What he was talking about is about creating this big blockchain, right, that is censorship resistant and trustless. Here in the Layer 2 seminar, we're talking about Layer 2s. As Haseeb has said, rollups are really sort of favored by Ethereum literati. I think this is how you framed it in your article. And Vitalik himself is saying that no single rollup can handle all of this data. So while Peter is saying that rollups are not totally decentralized, while we're going towards decentralization. So although we have this endgame vision with multi-rollup ecosystem and this big blockchain, what is actually happening? So may I invite Haseeb to share his views about layer 2 and rollup specifically.
I'm happy to, and thanks for having me, Agnes. So, you know, I wrote this piece a while ago. I think this was closer sometime in the summer, where this was a moment I think that felt like kind of peak layer 2 hype. It was before actually most of the layer 2s had even launched. So I think at that time you had both Optimism and Arbitrum still in sort of gated form, so that most users couldn't interact with the stuff going on. They were deploying the applications there. And what I predicted at that time was that you know, the layer 2 story had a lot of similarities to the Plasma stories. I don't know if people remember Plasma way back in the day. Plasma was sort of the original layer 2 design on Ethereum. It was co-designed by Joseph Poon and by Vitalik Buterin. And the idea behind Plasma, it was kind of very similar story to what we talked about with rollups, is that it was going to be a very decentralized and, you know, kind of very easy to use, very fast, very cheap, very scalable layer 2 built on top of layer 1 that had similar trust properties to the kind of stuff that people were doing on layer 1, which at that time was mostly transfers and trading tokens. It became very clear that Plasma wasn't going to be usable for smart contracts, which is what most people in the end really wanted to do on layer 2. They didn't just want to transfer assets. They wanted to do, you know, sort of more higher level functionality like they have today in DeFi. At the time, though, that wasn't really obvious. But the reality is eventually we got some plasmas, and most people don't spend that much time thinking about the fact that we did eventually get some plasmas. And for the most part, no one used them. Nobody really cared that the plasmas existed, that they were fairly decentralized. The only things that people actually used were things like XDAI, which is basically just a sidechain. It's you know, it's like a proof of authority sidechain, so it's not even meaningfully decentralized to the extent that some sidechains like Polygon are even kind of decentralized. So now at the time in the summer, when you started to see these layer 2s go live, like Arbitrum, that it was the first one to open up, and then, you know, Optimism eventually started opening up as well. You know, what we see today is that most of the activity, most of the users, most of the TVL is moving on to these other layer 1s that are EVM compatible. So you're seeing, you know, things like Polygon and Avalanche and Binance Smart Chain start to gobble up TVL, gobble up developers, gobble up users, and basically be the place where most of the action is happening. And Arbitrum, actually, I'm looking at L2Beat right now. Arbitrum has just, you know, a little bit over 2 billion in TVL compared to the, you know, almost 20 billion in TVL that you see on something like Binance Smart Chain. So it seems to me, I mean, obviously we're not at the end of this path yet. Optimistic rollups, the reality is today, they're quite a bit more expensive than these other layer 1s. But from the perspective of a user, they don't feel any different. They look the same. You have to, you know, go across a bridge. You have to pay, you know, you pay lower fees. There's a bunch of DeFi on there, right? Like that's what it looks like if you're a normal retail user, or you're a trader, or you're you know, some kind of DeFi participant. And for those people, most of what they care about is not whether or not Vitalik approves of the security model. What they care about is, okay, when I move to the bridge, how's the bridge? When I get there, how are the fees? When I get there, what can I do? And it seems that the answer to most of these things is being right now better served by these other layer 1s that have different security models. They're not the Ethereum security model, but for the most part, give users more of what they want today. I think eventually that might change, but it doesn't seem to be the case at the present moment.
Right. So I see what you're saying. Basically, what we were promised with blockchain is banked and banked, access to everyone. And right now, if you're in a developing country, it costs around $600 or more to deploy smart contracts. It's not really so trustless or censorship resistant. Well, it is censorship resistant in Ethereum case, maybe not so much with the other layer ones. We'll see what happens. But so the big topic is obviously decentralization. We are going towards that. It is a difficult way, but many of the believers believe that this is the only way to go. Piotr, may I ask for your opinion about this?
Yeah, of course. So I want to echo some of what Hasib said, that yes, what we see is that users are on those other layer ones. But what I feel like is the real strong value proposition of layer 2 is the fact that the idea is that it's going to inherit the security properties of Ethereum. And what this means, of course, is that you're going to enjoy the same level of censorship resistance, the same level of resilience, the same level of, if you do a transaction, you don't have to worry that what you're using will go offline, like some of the blockchains can do if they are run by a central set of validators. But the decentralization aspect is very important in this case, but not realized in the current layer 2s. And this is because the technology is tricky to implement. We have the framework, right? The framework is take the data that the blockchain would normally process, post it on layer 1, don't do any execution, have the execution be done on layer 2, and voila, you get scaling. Okay, but then you have to implement it. And as it turns out, you either have to implement the ZK proofs, which are a research area. There are solutions that use them right now. So the technology it was Moonmath some time ago. Now it's no longer is, but building a system that can support smart contracts with it is hard. And there are multiple teams like Starkware and ZKSync working on it. On the other hand, we have optimistic rollups, right, which seem to be easier to implement, but then you kind of have to implement an EVM and EVM and with the fraud proofs. So the challenge is still there. And the challenge is so big that the systems that we have right now haven't yet fully achieved this grand vision. And they run with training wheels. And by training wheels, I mean the systems have admins, they have owners, they have upgradability, which basically means that the security model of the current layer 2s is in some ways comparable to the security model of those other layer 1s. They can go offline, they can have intents, they can change the implement under the user's feet. Now, while we can say, okay, that's bad for now, we also must think about the fact that those other layer 1s won't be able to provide other security guarantees in the future. Well, the hope is the layer will be able to eventually become decentralized and realize Vitalik's vision from Endgame, where we enjoy maybe not all of the same security properties that Ethereum has, but at least most of them. And this will allow users to enjoy a level of innovation that is currently reserved to those that can pay hundreds of dollars per transaction.
Yes, what do you think, Pedro? So really, if a user cares about security of Ethereum so much, so likely is a big whale, so he can easily afford the fees of Ethereum layer 1. And really, how can a user verify the security features of a rollup? As you wrote, Piotr, yourself, how can a user verify what's actually deployed, whether it was written in the white paper? So right now, what they care is easy access to Polygon or some other layer 1s, some having fun farming, low fees. So it seems that the users are actually driving where the ecosystem is going, where the protocols are going, or we will still stick to our decentralization and strong blockchain network effect. Hasib, what do you think?
Well, I think it's also worth making a distinction between types of rollups. So, there are two kinds of rollups. There are optimistic rollups, and then there are ZK rollups. And I think talking about them both as though their trajectories and trade-offs are the same is probably is probably unwise. So, I mean, given this whole panel is about L2, so we should probably distinguish the two. So, the optimistic rollups are the main thing that are sort of active today, meaning Arbitrum and Optimism, and then of course there's Boba, and there's a few others that are in this category. And in some sense, these are easier to get off the ground if you want to do generalized computation, because the optimistic rollups, a kind of one sentence description of an optimistic rollup is that I sort of assumed that you did the computation correctly. And if in fact you didn't, then later I can sort of challenge you in court and then prove that you lied about the computation. But otherwise, we'll just sort of pretend that you did everything right, which is it's actually a good description of how the world works. Which is that most of the time we don't if I sign a contract with you, I don't go and prosecute it immediately and say did you exactly follow every letter of this contract? I sort of assume you did, and if I think you didn't, then I can go try to prove it. But most of the time, I just everyone assumes everyone else is following the law, and so it's a good idea. And it naturally does offer a significant constant factor improvement in scaling, but it comes with its own problems. And one of the big problems with optimistic rollups is that so one, it is only a constant factor scaling, and it can't really butt up against a sort of anything beyond that constant increase in scaling. But the other thing about it that is that makes things challenging for an optimistic rollup is that it requires these long, what are called challenge periods. Basically meaning that, let's say you and I have a contract, and at the end of the contract, I'm supposed to pay you some money, right? Let's say you're supposed to, build my house, and after you build the house, I'm supposed to pay you. Well, I can't keep once you actually build the house, I have to then inspect the house, make sure that the house is right, and then I pay you. Otherwise, if I've already paid you and you already made the house, and I go in and find the pipes are broken, then I'm kind of screwed, right? I can't. How am I going to get my money back? So in crypto, the same thing is true in optimistic rollups. Is that there's a certain period of time that I have to basically inspect the work you've done before I have to pay you. And if I pay you before then I'm kind of screwed, right? And what that causes in an optimistic rollup is that if I want to withdraw from an optimistic rollup, that's like my house inspection time. That is the time that I have to verify that the work was done correctly, meaning that I can't actually get the money out. I can't actually withdraw until that challenge period is over. And so that challenge period for most of these optimistic rollups is parameterized to be 7 days. Meaning that if I want to withdraw, I have to wait 7 days before I can get my withdrawal out, which is much longer than even a centralized exchange. It's a very, very long time in most, if you're trying to, dart out of a Ponzi scheme, then okay, 7 days is long enough for the whole thing to fall apart behind you. So for that reason, now there are a lot of proposals on how to solve this problem for optimistic rollups, like what's known as fast exits. And fast exits are basically just market makers. So it's okay, somebody has money on both sides, and they give you some money on this side because they know that you're going to be withdrawn, but it requires them to have liquidity. It requires them to have inventory, and sometimes market makers aren't going to hold inventory for random shitcoins that you're trying to get out of. So if you're in some ohm fork and you're hoping that somebody's going to give you a fast exit, well, a market maker might not want to have ownership of some ohm fork on both inside your L2 and outside your L2. So it's going to make things complicated, and it's going to cause people to have to pay some slippage in order to move out of the layer 2 if they want to do it quickly, the way that they do out of a Polygon or an Avalanche or one of the other chains that they're more used to dealing with exits. So this is the big problem with optimistic rollups. Now on the other side, you have ZK rollups, and the ZK rollups today are relatively small in TVL, right? So you have Starkware and you have ZKSync, and ZKSync has a sort of generalized zero knowledge rollup, whereas Starkware kind of has individual application specific rollups that they've launched in partnerships with specific apps, like with DYDX. So ZK rollups are different in that they're quite a bit cheaper than optimistic rollups. I think by a factor of 3 or so. They're cheaper on a per transfer basis or per instance basis. But for ZK rollups, it's much harder to do generalized computation. But we're at a point now where, to Piotr's point about them being moon mathy, the moon math was just okay, how do you transfer people stuff in zero knowledge, and it's kind of super fancy math computation. But to actually do generalized computation is even harder. And for a long time, this was thought to be impossible. So it was perceived that the only way to do generalized computation was in the optimistic style. And if you wanted to do it in ZK, good luck, maybe in 10 years, we'll figure out how to do that. But in the last year and a half, we've had an enormous amount of research into how to do what we now call ZK EVM, meaning proving execution of the EVM, the Ethereum virtual machine, in zero knowledge, to the point where we now have realistic proposals of how this is going to get done over the next year or two. And so both ZKSync, the Matter Labs team, and Starkware are working on instances of how to do generalized computation in zero knowledge. And this is going to cause a very different kind of rollup in the future. Now, we're not ready for them yet. It's going to be a while before they're production ready, much less when they're initially going to be launched. But with ZK EVM, this, I think, allows you to get to a different set of trade-offs that are much more exciting to me about how layer 2s can function. So for one, there's no challenge periods with ZK. So if you're doing something in zero knowledge, that means you're proving it's correct. You're not hoping it's correct, right? It's like, you build my house and then I, put up some kind of, cryptographic scanner that proves that the house is correctly built, and then boom, I pay you, we're done. I don't have to hang out for a week and like check out the pipes, right? That it holds a lot more promise for the kinds of experience that users expect when they're interacting with a layer 2 and potentially having to move money in and out. But then second, with a ZK rollup, not only are the fees significantly lower just because of there's less overhead that has to be posted on chain, but there's a lot more. There are further places you can go if you're willing to ease some of the requirements of data availability. So there's this notion of what's called a validium, which is a very different kind of rollup. It's different from it's not what we traditionally think of as a rollup, but it's something in between, more like a ZK plasma type thing. But it allows you to know that the transactions that are happening on chain are correct, even if you don't have the data on Ethereum to reconstruct those transactions. And if you use a validium, then you can basically get cost savings and levels of payment that are as cheap as the kinds of transactions you see on Polygon. So most if you're going to interact with ZK EVM, most likely transfers are going to be on the order of call it 50 cents, $1, something in that ballpark, right? Like cheaper than what you see on something like Arbitrum, but not insanely cheap. But if you get something like a Validium where you're not paying the cost of having to put some data on Ethereum every single transaction, then you can start to see costs come down to be similar to what people are experiencing on these non-Ethereum blockchains. So that's what I'm really excited about in the longer term for rollups. In the shorter term, I think most of what we see on Arbitrum and Optimism today, they're kind of band-aids on top of the Ethereum experience. It's like it's this kind of middle. It's sort of like, I think most users want to live on the barbell. So one side of the barbell is Ethereum, super high security. It's where all the money is. Like that's the place to be if you want to transact for really high amounts of capital, or if you just want to have access to the very cutting edge of DeFi protocols. And then the other side of the barbell is the super cheap stuff. So Binance Smart Chain, Polygon, Avalanche, etc. This is the stuff where it's super low cost to transact, and even if you're in developing markets, you can afford to interact with this stuff. That's where I think most users will want to live. And unless you're in one side of the barbell, I think it's going to be a fairly narrow set of users who want to interact with those applications.
Right. So it's a couple of interesting points that you raised here. I remember the original Bitcoin white paper, white blockchain, no single point of failure. So obviously we know that layer ones, they are sort of like organizations that provide a blockchain style, I don't know if it's nice to say that, blockchain style database, let's put it this way, to enable DeFi, similar DeFi applications, etc. Why Ethereum is strong? Because it's distributed all over the world, and why these, just for a simple user, and these layer ones, they do have validators, but they have, let's say, much less validators, like 1,000 validators for some of the layer ones. So that means that it could be a single point of failure. Also, I want just to explain to a simple user, what did you mean by bridging and by this withdrawal period? So let's say if you are on Ethereum layer 1 and you want to go to Arbitrum layer 2, you have to use a bridge. So there are official bridges that you get there, and you have your money in the same address on Arbitrum. And to withdraw, if you're using optimistic rollups, which is the case of Arbitrum, you have to wait for 7-day withdrawal periods. Yes, there are projects, bridges that operate pools. So how it works, These liquidity providers have liquidity on both sides, on Ethereum layer 1 and on Ethereum layer 2. And so they take the risk of withdrawal. So then you can withdraw much faster, like straight away. And then this optimistic rollup challenge period stays in their hands. Just to explain a little bit of background. What I know, what is very interesting for Piotr is upgradability of smart contracts and all of these rollup solutions. Piotr, can you speak a little bit more about this?
Yes, of course. So basically, Ethereum smart contracts are by default immutable, right? So if you, for example, want to read the code of Uniswap v2, right? You go to Etherscan. Etherscan shows you the bytecode and also the source code in Solidity. You can see that the contract has some functions. You can deposit money into it. You can swap, and that's it, right? You know that, for example, in 2 days, in 2 weeks, in 2 years, the contract is going to be the same. Now, there's a pattern called a proxy in Ethereum smart contracts, which means that you can have a contract that delegates its execution to another contract. So, for example, I could have a contract that manages some amount of money, but allows someone to change the rules of the money is managed. Because, for example, you would like to change the interest rate or how the curve is calculated and stuff. So what you do is you deploy 2 contracts. One contract is the one that delegates the execution, and the other holds the current system. And if you want to change the rules of the system, you deploy a 3rd contract and say to the first one, look now on the 3rd contract to know what rules to follow. And this mechanism preserves the fact that the contracts cannot be changed, but also enables the contract to follow different rules in the future. And this is especially good for products in development, because if I have a smart contract, but it's not in this finished state, however you want to define it, I still want to tinker with it, right? I can add this upgradability to it in order for me to fix potential bugs, add new features, and basically enable a more traditional, let's say, Web 2 experience where, you know, apps constantly improve over time. However, the idea, I guess, is progressive decentralization. So users over time expect that this pattern of changing the implementation will cease, that no longer it will be that someone will tinker with the smart contract so that they can put full trust into it, right? Because in traditional systems, you need to put some trust into the system in order to use it, right? With banks, with, I don't know, custodians, right? But the big innovation of smart contracts is that the trust is eliminated. With the upgradability, we bring back trust in the hope that it's only for a short period of time. And then after this trust is removed, we get all of the nice properties of Ethereum. And the reason why upgradability is important for layer 2s is that almost all of the layer 2s have this upgradability right now enabled. And this implementation can change. And so this is why I think it's important for third parties like LTB to monitor this, because the security properties change over time. And I think it's worth looking at to not have unexpected changes.
Yes, definitely recommend everyone to read the recent article of Piotr and LTB team. Is $6 billion locked in layer 2 secure. Pretty interesting indeed to have a glance. Hasib, let's go back a bit more from the user's perspective. So when do you think it will be, the layer 2s will be ready and easy to use for the user? When do you think they will not care anymore whether it's Polygon or Arbitrum is just, plug in and you have a nice UI? Do you think
well,
we're far away?
Yeah, getting to a nice UI, I don't think, I'm not that worried about, how long it'll take to get to a nice UI. To get to a nice UX, I think is a difference. Well, UX meaning user experience as opposed to like how it looks and feels. when you're talking about a blockchain, there's a classic framework that I think about very often, which is about whether it's possible to compete on indirect properties of a system. So an indirect property of a system is something you can't actually feel as a user. And one such property is like security, right? If a system that you're using is secure or not secure, you actually can't feel the difference. You don't know for certain whether something you're using is secure or insecure. You might go to something like L2Beat and you might look up, how do they do state validation? What's the upgradability? What happens if a sequencer fails? But just as a normal user, when you're interacting with the system, those are imperceptible to you, right? And so for that reason, it's oftentimes very difficult to compete on something that's intangible, that isn't directly perceptible, like security or like decentralization. The way in which you compete on those things is only if and when consumers develop a preference that makes it very, very difficult for them to want to interact with something that doesn't have certain properties. And today, we can see very clearly that's not the case for most users in crypto. They don't have strong preferences for security. That's why they use things like sidechains. That's why they use things like Binance Smart Chain, which is not even ostensibly decentralized. The reason why they use it is not because they think that the only security model that they're willing to trust is one that's fully decentralized in the form of Ethereum. The reality today, and I think it's going to be a while until much of this changes, is that what Ethereum protects you against, and just to be totally pragmatic here, right? What Ethereum protects you against is sort of nation state level attacks. Right, that's the level of security that Ethereum provides from the perspective of most users. And something like a Binance Smart Chain protects you from basically Binance deciding to not do the right thing, right? And if Binance decides that like, hey, we're going to start messing with Binance Smart Chain, or we're going to stop providing APIs that allow people to actually read the state of the blockchain, because running a node for Binance Smart Chain is extremely difficult, and most people, even with high-end servers, can actually sync nodes to Binance Smart Chain. So if you're basically relying on the Binance doing the right thing, for most users, it's like, okay, well, I'm already relying on Binance to do this right thing because I use their exchange, and a lot of my money is on their exchange. And so if they're going to screw me on their exchange, then I guess they'll also screw me on Binance Smart Chain. But it's like, I'm already taking that risk, so I might as well, in for a penny, in for a pound. I think eventually you're going to see the attitude of consumers change with respect to what they expect out of the security model of the blockchains they interact with. And I think one of the obvious reasons why they will care about that is that the moment when consumers started really caring about exchanges was when Mt. Gox shut down. And it takes a high-profile failure for people to suddenly feel that, hey, it really, really matters which particular exchange I deposit my funds into. And now, we just heard about another exchange failure that again, is the reason why most people now trust only the really, really high credibility exchanges. And it's where, they do almost all of the volume, and most of these long tail exchanges don't do very much at all. It's because consumers now have this preference because they now feel the consequences of failure. And I think what you're going to see at some point is we're going to start seeing failures, and those failures might happen on certain layer ones that end up, they end up failing in high-profile ways, whether it be validation failures or revolts or things like this. I mean, you saw, I remember we just saw EOS basically rise up and revolt against some of the early commitments that they made to reward some of the early organizations such as Block One that were instrumental in setting them off the ground. I mean, I tend to support that activity but it is nevertheless like it's a blockchain that basically broke one of its core covenants, which is that Block One gets a block reward, and they're like, never mind, you don't get a block reward. It's like, okay, what else could they have decided to change? Could they have rewritten history? Could they have gone in and said, okay, we're going to delete the stake owned by Block One and fundamentally rewrite things that we otherwise would think would be immutable? There's a lot of history that's going to play out in crypto. We're still in the very, very early innings of all this stuff. And I think over time, to say nothing of layer 2, I think it's likely that we're also going to see layer 2 failures. To Piotr's point, the reason why we have these coordinators and the reason why so much of this stuff is being handled with kid gloves right now is because it's all beta software. None of this stuff has existed in the wild for that long, and it's likely we're going to see. Arbitrum has been down for a couple hours, which may or may not mean that much to you depending on your view of this stuff. But there's going to be dramatic failures at some point, because there's almost no way that we wrote these incredibly complex systems that we could have just invented a couple of years ago, and there are no major bugs. That just doesn't happen. Like, even Ethereum has had major bugs. Every blockchain has had major bugs. And so it's likely that we're going to see those in layer 2 as well. And so all that is to say, it's going to take some time before we understand how secure these things are, before users understand how secure these things are, and before they start to eventually start migrating their preferences toward these more robust security models. But in the interim, this is, again, one of the reasons why I think you're seeing so much adoption of these other layer 1s that are EVM compatible and have these bridges that go back to Ethereum, is because the security model for these other layer 1s is actually much simpler than for an optimistic rollup today. Because an optimistic rollup, look, if you screw up the code, then crap, the whole thing might break, and all the money might get stranded. Like, who knows? We don't really know what failure modes to expect out of these things. If the security model is correct, then it's all solid. But if the security model is not correct, then you're kind of screwed. And the same thing is true for ZK rollups as well. Whereas for these other layer 1s, if they screw up, it's like, okay, well, they can just fork and it's fine. But if a layer 2 screws up, you can't fork Ethereum to go save a layer 2, right? I think depends on the preferences of Ethereum users. But today, I'd imagine that there's nothing that's too big to fail anymore on Ethereum.
Thank you, Haseeb. Listening to you, what it reminded me, we're all talking that the trust lies in decentralization, and this is what we think that people would prefer. But then people again go towards centralized big authorities because they feel more comfortable. And remember, too big to fail banks. How many banks failed, but people still trust the banking system to put the money. It's really quite funny. And so when we're talking about crypto users, I think we also have to let's say justify different users. There are new users. There are users have been since 2016 who really value the security, who understand all these layer 2s and all these layer 1s. And there are the new users who maybe think, yeah, maybe this is the future. Maybe this is the way we will transact in the next 10 years, and they want to get in. Maybe they don't really want to get into so much details like Piotr does to understand the security and read the smart contracts. So it will be definitely interesting to see how things pan out. I would like to hear Nolan's views, as I can see he's back on the screen.
Yeah, I'm here to just give a quick reaction to everything I heard. I thought that was really interesting. And if I could summarize what you said, Haseeb, tell me if I'm wrong. Am I hearing that user, in the end, user choice has a lot to do with the way these things are going to get built out. However, user choice can still be influenced by the almost tectonic shifts as security becomes more obvious, or decisions are influenced by previous, catastrophes, let's say. So in the same way that Mt. Gox taught everyone not your keys, not your coin, and sort of turned that into a maxim for the industry, there are other major shifts that can come as we make these final design decisions. The consequences of failure will help push those users into the let's say optimized systems. Is that what I'm hearing?
That's right. And the other thing too is that you have to compete on the merits too, right? It's not enough to say I'm more decentralized than you, and therefore come use me and move all your money over to me. And it's like, okay, well, users, that's not what users respond to, right? You have to not only be secure, but you have to also offer a better experience.
Mm-hmm. And that's where, let's say, in the case of you'd mentioned how, let's say, Lightning had taken, it had been there was a runaround. Basically, people were using wrapped Bitcoin, and a lot of traders could still, do what you could have done with Lightning without That's Lightning, right. In fact. And now we're starting to see a lot more Lightning enthusiasm and push. But I do wonder if, when we do decide that this scaling for L2, and I'm going to be talking a bit more about this with Agna later on the optimistic rollup piece, but, isn't pushing a lot of that computation off and then trusting the layer, the L1 again, and all of its security, isn't that what Bitcoin has already done? Isn't that the model already?
Sorry, in what sense? You're talking about in the sense Lightning?
That computationally, there's no EVM, no one ever said aren't a lot of things essentially a rollup on Bitcoin. Am I wrong to think that way?
A few. I mean, not a lot that people use, but you know, Bitcoin does have its own VM. It's a pretty tiny VM. It doesn't do a whole lot, but yeah, there are a few things that are like that are sort of, you know, that are implanted into the Bitcoin blockchain, but there's no validation. But there's not a whole lot that people actually adopted very in high quantities that has that nature on Bitcoin.
Yeah. No, but what I liked about what you said though is that, you know, it's not so much the lack of popularity that hasn't allowed that, you know, the Lightning piece on Bitcoin to take off and use some of that dexterity. It's more that there hasn't been enough people and there hasn't been enough learning from failure and iteration and feedback loops and A/B testing and all those other pieces.
That's right. And I also want to give credit where credit's due, right? Like the rollups are all new. So Arbitrum, Optimism, like they just came out. They're still working on a lot of the infrastructure to get to parity with regular EVM. And so it's not as though the story is written and it's all done and now it's a fair fight. So you know, as much as I am kind of touting this thesis that I think, you know, these layer ones are superseding layer twos or whatever, it's like we don't know until, you know, right now it's like round one of the fight, and you know it's an 8-rounder, so we got to give it some time before we can start calling who's actually winning.
So my frame for this whole talk, there's a few design decisions, and once we figure them out, it's all good, is not exactly it. There's design decisions. Some people got to bleed.
That's right.
Then we're going to learn.
That's right. And it's like, you know, every market in crypto, right? Like you're going to look really dumb if you call it in year one, right? So, you know, DEXs did not work for a very long time, and then suddenly they worked and they just took over the world. And I think it's quite possible that layer 2 is the same. And the race between ZK rollups and optimistic rollups is also, again, in its very infancy. We don't even have any ZK EVMs yet, but probably, you know, in a year's time, we're going to have most likely several.
Well, in a year's time, we'll have you back and we'll talk all about it.
Sounds
so
great.
Thanks to our first round of panelists here. You guys were great. I learned a lot. That was tremendous. Coming up, we're going to be seeing a little bit of a demo now. We'll be joined by DeFi Slate and Alvin Lee in just a moment. And then when that is finished, I'll be back to have a discussion a little bit more about optimistic rollups and what they mean, what we get with them, and what the state of play is with them, and what we can look for, even though we've heard about quite a bit of that already. We're going to be covering it from a few different angles that I think are going to be accessible and interesting. But now I'd like to hand it over to Alvin, who will be running our demo. Thanks, everyone.
Thank you, Nolan. That was fantastic framing from Hasib, from Piotr, from Nolan and Arthur. And I wanted to say hi to everyone. My name is Alvin. I'm a lead evangelist at DGate Protocol. We are a decentralized exchange protocol built on layer 2 Ethereum, and we are super invested in the health of the overall emerging layer 2 community. And of course, I wanted to say hi to Andy and Robbie from DeFi Slate. And how are you guys doing today?
Doing well. Happy to be here. Thanks for having us. Yeah, keen to explore all of layer 2. Yep.
Yes, sir. So maybe you could do a brief introduction of yourself and what DeFi Slate is about before we begin.
Yeah, for sure. So Rob and I, we both started DeFi Slate back in June of 2020 or so, kind of in the early days of DeFi yield farming on Ethereum, when this panel wasn't, a thing. There was no need for this panel back in those days, but here we are in a high gas environment and excited to scale Ethereum. And that's basically all that we've been, just planning and working on over the last year and a half or so has been a whole lot of DeFi education. We started very extremely focused on Ethereum and DeFi on Ethereum. And then we've kind of switched to like a multi-chain and a layer 2 kind of approach in our recent content. So we have a podcast, a YouTube channel, our Twitter and our Substack. And basically we're just an all-in-one comprehensive education hub for DeFi. We are in the trenches all the time, and we share our experiences and hope that it's valuable to our community.
Cool. And Robbie, I know that Robbie and Andy, I know you're good friends. And Robbie, you're super interested in ZK technology as well, as a math major and a math researcher.
Yeah. So Andy and I met at the University of Florida, and it's been we met at the blockchain club there, and it's been super interesting to see kind of the evolution of DeFi. Like Andy said, I mean, we're an educational content hub on DeFi and the multi-chain, and ultimately the high gas environment is kind of a good problem to have. Back in the day, ETH was much less expensive than it is now. It was much less congested, and it's because of the high price and the high activity that we've kind of been subject to these high gas fees. So yeah, excited to kind of delve into the layer 2 scaling race and especially ZK technology as it evolves.
Great. So I thought I could spend 5 minutes just going through like a brief demo of what DGate is up to. And then we can just chat a little bit about the product and about what you guys are up to in the next and how you foresee what's happening. So I'm gonna play the video. I'm gonna share my screen and play the video. And feel free to chime in with any comments that you have as I showed the demo. So this is just to frame it a little bit, is the upcoming limit orders decentralized DEX protocol that we're building. It's essentially, let me share my screen real quick. There we go. Yeah. So essentially, this is what it looks like, and I'm gonna jump right in. Can you see the screen okay?
Yeah.
Yep. So I'm gonna share with you like basically, as you can see, it kind of looks like the a centralized exchange setup. We have the candles over here, and but it's actually a decentralized exchange protocol in the sense that we're building it such that you can connect it to a wallet. For example, we can click here on a wallet and connect it to MetaMask, and actually operate like you would like any like decentralized protocol. So it's similar to things like Uniswap or so on and so forth, except that it's limit orders instead of market orders. And this is going to connect the wallet, and it shows connect success, register an account, and before you know it, you're inside layer 2 Ethereum. This current demo was built on Arbitrum. One of the partners that we're building on Arbitrum, and we're closely looking at all chains as well that are on layer 2. So once you get in, you have to fund the account. So we're going to do a bit of a deposit. We're going to deposit a bit of ETH. Right now, it's in the Rinkeby test account on Ethereum. So we're going to deposit maybe say 0.03 ETH and confirm the deposit. So we have to confirm it on MetaMask, and it goes in. You still have custody of your Ethereum, except that it goes into smart contract, and it goes into being able to be used on the limit order DEX protocol.
Yeah,
so
one comment on that real quick is very similar to the ZKSync type of onboarding process, where you have to sign a message from your MetaMask in order to open your layer 2 account, and then you can start to deposit funds into that layer 2.
Yep. And you can see here that there's a withdrawal option as well. You can withdraw your funds. This is the DGate website. I was going to show very briefly. And also the bridge. We built a bridge from Ethereum layer 1 to Arbitrum layer 2. And there are many bridges. So DGate bridge is one of them that's quite popular, and it allows people to essentially bridge that Ethereum or other funds from ETH layer 1 to Arbitrum and back in a quicker way and a low cost way. So we're going to go demonstrate a bit of a trade here, right here. We're going to go in and let's see, what's the price of Ethereum? Maybe we want to sell a bit of Ethereum. We have a bit of Ethereum and we want to sell it, Ether, I mean. And we look at the chart. So maybe we want to do a bit of looking at the price here. And we want to, so we have a spot trading and we also have a grid function, which I'll talk a little bit more about in a bit.
That ETH price looks nice.
Yeah, this is a test. This is a test environment. It will get there soon enough, I'm sure. Not financial advice. So yeah,
where does the liquidity come from here on this order book? Is there like a place for LPs to provide their liquidity, or is there market makers that you guys have? How does that kind of work? Here we go.
Yeah, we're definitely looking at providing options for liquidity miners, just like many similar other protocols, decentralized protocols. So we did a trade here. I think we're looking at the trade of ETH USDC. We're probably gonna sell some Ether here, and we're gonna click sell. We're looking at the price of 4894. This is not the real price, by the way. This is just a test environment, but we're just simulating it. One thing to note is that the protocol is designed to make it cheaper for makers or people who place the order, and we're building it on Arbitrum and also on looking at closely at ZK technology and also any other layer to actually try to make it as cheap as possible to do a transaction. And we're looking to make it very free for makers or people who place orders in the limit order environment. So we're going to sell like 0.025 Ether, and we're going to sell it. And there we go. Because we placed the order at a lower price, it was executed immediately. We're probably going to place another order. It was filled immediately, as you can see here in the order history. We're probably going to buy back just to test it out. And we're going to buy back at a lower price so we can make a bit of money. And we're going to buy back at a low price, and we set in the order. The order is sent, and we're just waiting for the taker to take that price. So essentially, this is what the early protocol looks like. And we're super excited to work on it and get better at building the protocol, and looking forward to share more. I want to share one last thing, which is that we are working on a grid function. So people want sometimes they want to trade the volatility of Ether. So we have a built-in AI strategy to actually allow people to trade that band, like buy and sell Ether within that band automatically, and also in a custom way that they can set their own range.
So that's like a range trading thing. It's like a bot almost that will automatically buy and sell at those prices for you.
Yep, exactly. Yeah, so I'm just super happy to share like an early sneak preview of what we're working on, and I'd love to chat a bit more and also find out what you guys are up to. Okay, I'm gonna stop sharing the screen now. Can you guys see me okay?
Yep. Yeah, that's awesome. That grid feature seems like super interesting. I'm excited to see the development of that. It's like trading the range is something that a lot of like the OG crypto traders on crypto Twitter are always talking about, but it's really hard to do, to buy at support and sell at resistance, in some sort of short time frame. But having that strategy set up seems really cool.
Yep. We think that it's going to be super popular. The other thing that we think is going to be interesting is we're going to make maker fees free, so that it incentivizes them to place orders and wait for takers to take that order. And of course, you mentioned liquidity, and that's super important as well. We're working on incentives for that.
Yeah. Also on the LP provision and kind of the decentralized nature of the exchange, is there an opportunity for anyone to create a pair similar to Sushi or Uniswap? Or is that something that DGate holds access to, and then is going to add more pairs kind of continuously?
Yeah. So right now in the demo, you only saw one pair of ETH USDC, but as a protocol, we believe in the ethos of Ethereum. So permissionless, trustless, permissionless, and so we're likely to make it open for permissionless for people to come in. Yeah, and also incentivize liquidity miners from everywhere.
Awesome. Yeah, we've been doing, I mean, we've been doing farming and trading on like every layer too. There is, I think the one that we've kind of slept on is optimism. But you know, I was listening to an AMA there last night on Twitter, and it seems like their available applications is starting to grow quite a bit. And we're finally seeing a lot of these true layer twos grow their decentralized applications. Arbitrum's kind of been a winner to start, but they've also kind of slowed down. So it's really like a space race again. We had like the layer one race in the last few months, which was a lot of fun, a lot of liquidity incentives. But I imagine once these layer twos really start to flourish, that a lot of the liquidity will kind of be vacuumed out of those layer ones due to the lack of the security model of Ethereum, and kind of into these layer twos, which are inherently cheaper and more secure. So I'm kind of excited to participate in this next wave of roll up, you know, airdrop hunting and farming, and kind of getting active on these layer twos, and then creating content about them so that we can bring more users over.
Thank you. Thank you for coming, Andy and Robbie. And I just wanted to hand over to Nolan. I think he has a question.
Yeah, hey Andy and Robbie, you guys are great. I was checking out some of your content in the lead up, and looking forward to seeing more stuff. You guys are certainly in the weeds, and definitely you know, doing a great service to the people who have to sift through the hyper speed. This question is coming from an audience member, and it sort of dovetails a little bit with what you were saying, Andy. And the question is, though, for you, Alvin, I believe. Are we limited in token availability based on how much liquidity has been provided by the others? So is it that model really like what we see with you know, and I think that's what Robbie was mentioning. Is the liquidity that is being provided by users a limiting factor, let's say, in how things can grow?
Yeah. So I think that, you know, because we are aiming to be and built on permissionless, trustless, and decentralized principles. So obviously, if a trading pair like ETH USDC, there's a lot of liquidity provided, that makes for a much smoother market, and more people want to come trade, and it's like kind of like a positive feedback loop. So there will be some pairs that don't have enough liquidity. We anticipate, especially since theoretically anyone could like put an ERC20 token. So yeah, in short, it is a factor, like the people who provide liquidity. That's why it's important to like kind of build incentives for liquidity into the system. In practice, it's likely that certain pairs will just be more popular, like ETH USDC, or so it's similar for like any other decentralized exchange.
Yeah, that makes sense. It was an audience question, member, but a question from an audience member, but I definitely wanted to get it out there and make sure that it did dovetail nicely. Now, I just want to give a last. We're going to be taking a quick break before we come back with our next panel, but I just want to give a last little moment to Andy and Robbie to mention any new content coming up, or any new projects that you guys want to plug here for a minute.
Yeah, we have a ton of content coming down the pipe pretty much every day. Releasing something on the US Congress hearing yesterday, demos and walkthroughs and AMAs coming really every single day. Make sure you join our Discord. We'll leave a link wherever the appropriate place, and check out our YouTube channel, DeFi Slate. Check us out on Twitter. And yeah, come learn kind of alongside us on the whole metaverse journey.
Great. And
Yeah.
I'm sure we'll hear from you guys again soon.
Yeah, just to add real quick on top of that, all of our content is going to be pretty focused on layer 2 and layer 2 kind of farming and apps coming up for the next few months. So if you're interested in kind of scaling Ethereum, that's where our head is going to be. It's been fun to play around the side chains, but staying with the ethos.
Great. So L2 specific content. So any questions as this industry moves so quickly, please go have a look at DeFi Slate and stay with us, because we're going to have more next on optimistic rollups. Basically, reasons to be optimistic about Ethereum. So that's what we're talking about next. A short break, and I'll be right back with our two guests. Thanks, everyone.
Thanks, Robbie, Andy.
Welcome back. Real short break. So I've got two guests ready to join us here. I've got Agne, who you met earlier in our chat with Hasib and Peter. And we've also got Elena, the CEO of Metis, who has joined us today. Now, I've got to, first of all, the Russian female names, so beautiful. I love the end, how it's different, male and female, but I have trouble pronouncing them. So pardon me if I've skipped over your last names. No problem with the first names. And pardon me, Agna, I'm not sure if your name is actually Russian. It might be something totally different. Probably Polish.
It's Lithuanian, but
Lithuanian. Okay, Lithuanian. There you go. But nevertheless, I have the same problem, so it sort of applies to the whole area, Germany included. Even though my name is German. There you go.
Well,
so today we're going to be.
The Greeks beat us at the names.
One more time.
The Greeks beat us at the names.
Yeah, no, I don't even start. There's too many syllables. What are they thinking? Like you could cut half the name out, most of those Greek names, and it would still be a name. Like it would still have multiple syllables, and you could read it. This is a small total side note, but I think it's funny. There was a baseball general manager whose name was very similar to Andreas Antonopoulos. And I wrote a report for the government of Canada on, Bitcoins and stuff like that many years ago. And I had actually put, instead of Antonopoulos, Anthopoulos, which was the name of this baseball general manager, throughout the whole report. And I only noticed it, and no one had noticed because it was, it's probably 5 letters difference, but it sounds the exact same. So we caught it at the last minute, but neither here nor there. So great. Today we're going to be talking about optimism, reasons to be optimistic for Ethereum, and the L2 optimism piece. First of all, that is one piece that we just want to talk about from the beginning, right? Optimism, right? It's sort of like an emotional word. Why do we use the word optimism to talk about the L2 piece, right? So there's a reason for that, and it's not just about a word that I like to use called persuasion. It's a little bit like priming someone to understand something, right? Where you put a context and then they'll just sort of agree with it. And that's what I worry optimism is, but it isn't actually that, right? So I'm worried that optimism is sort of a way to put a positive emotional spin on a thing, even though it's a technical piece. So I just want to start with you, Agna, just about that optimistic piece and what it means and why it's not really about emotions that we're talking about. What is it about optimistic rollups that allow us to at once use the word and what does it signify? Oh, you're muted.
1 second. Yes. Mm-hmm. Sure. I totally agree with you that we can have a couple of meanings for that. So here in this case, we're talking about optimistic rollups. So for a simple user or for a regular listener, we have rollups. So rollups are basically, this is how you roll up the transactions and put them on a layer 2. That's what we call it, rollups. So we have optimistic rollups, and then we have zero knowledge rollups. And optimistic rollups are, in this case, is then when you withdraw back from layer 2 back to Ethereum mainnet, you're sort of optimistic that nobody has committed any fraud. And so there is this 7-day period for someone to challenge that. So we're saying that optimistic rollups is that we're optimistic in the way that nobody has submitted a fraudulent transaction. Whereas in a zero knowledge rollups, there's a cryptography already involved. That's why you can withdraw straight away from layer 2 back to layer 1 without this waiting period. So here we are talking about optimistic rollups. However, as you mentioned, there is another element or another angle we can look why to be optimistic about Ethereum. So Ethereum in general, what should we be optimistic about this as a network? What does it promise us? What kind of future can we see? So I would say maybe we should discuss both sides, especially in light of Vitalik Buterin's endgame piece, which he wrote. And so he was actually saying that no single rollup can handle the whole transactions on Ethereum. He was talking about a multi-rollup future, frontier staking, various complicated stuff. But I think why should we be optimistic about Ethereum? is that it's really the only truly decentralized blockchain. This is what blockchains are about. It's censorship. It's so distributed, and the system is so complex that at the end game, at the end point, as Vitalik said, anyone can have access, anyone can deploy, hopefully in a relatively small fee, a smart contract, and that can enable whether right now, yes, you can create an app, you can upload it on Google App or App Store and stuff, but it is censored, right? So you have to be approved. And what Ethereum as a blockchain gives us to be optimistic about, resistant economy that is accessible to anyone that has access to internet.
Great. So I definitely just want to make sure we separate the optimism of the protocol with optimistic rollups and make sure that everyone understands we're talking about two separate things. And indeed, optimistic rollups really is just about another way would be call them like the benefit of the doubt or benefit of the doubt rollup. We'll check it in a few days but for now, I think like as Asiba said, it's like your inspection of a house where you expect the house to be in a certain condition. You would be stupid not to check, and you definitely need the tool to be able to revoke, but it's certainly important. So Elena, welcome.
Thank you.
Wonderful. So certainly, we've separated optimistic rollups to optimism and future of Ethereum. Now, of course, there's a certain malaise that has set in recently, for lack of a better word, fighting new challengers that came around Ethereum, Solana, Near. We've heard a lot about Polygon and all the Binance Smart Chain, of course, comes up all the time. So lots of competition going on. And, Ethereum had, let's call it a early lead, right? They were much older than a lot of these other programs, smart contract platforms. And I guess the malaise happened when folks said, well, we've had this big lead, so many people did really well. We have all these inventions, they've been out, conceptually for a while. Why are other chains getting momentum, right? So that's am I wrong? Have I painted a fair enough picture here?
It is true. Yes. Yeah, exactly.
Yeah. So that's kind of the context, right? Now, we see the certain amount of tension, and then of course Vitalik writes what I thought was a pretty interesting piece this week, describing the end game and those design decisions that can go into this the next little bit here. So just commenting on first of all, competition. What do you think about that? What do you see in that? And is it good? Is it a winner take all? Is it a scarcity mindset? Can there be a million chains, right? There's no right answer. But I just want to hear a bit about how you've sort of thought about the past few months and how you see the next, this inflection point.
Oh, thank you, Nolan. This is a very kind of that's a good subject to discuss. Of course, it would be great to discuss with, all the participants on the panel, but here we are, Ethereum fans here discussing without, any Solana or Near or, other chains. But what, my opinion, again, and what blockchain is about and what it gave us is the decentralization. That's the kind of because blockchain itself, it is a database. It's just the way to store data. It's a data storage. That's what it is basically. And there are other, and that's why it is a chain. So it could be supported by decentralized parties, right? So it's decentralized, but supported by the people in the world, no matter who they are, where they are, and where they're located. So now, when we talking about other blockchains that doing it differently, of course, they find their niche and their audience, otherwise they would not exist. And Ethereum challenge is the main challenge, is actually decentralization. And the main value is also decentralization. So that's the chain that follows it through being a true blockchain, true decentralized chain. Because when we stop being decentralized, it becomes cheaper, it becomes easy to build, no brainer, right? But might as well use SQL database, or other databases. Why not? Because they are faster, they're more scalable, they're easy to support, they're cheaper. But people use blockchain for the purpose because they want this decentralization aspect. And that's what Ethereum is all about. And that's where it is heading. And that's what optimistic rollups is also about, because they are based on Ethereum. They inherit the security of this decentralization, because decentralization provides the ultimate security, because there's no single point of failure there. It's not dependent on one company, on one party that can fail for some reasons, right? So therefore, Ethereum cannot fail because it's decentralized. Other ones, there is a question about it, right? So at some point, they might, right? So people, when they are trusting their money to the centralized body, have to understand that risk. When they trust in money to Ethereum, they understand that it's their own risk. They are in charge of their money, but the system is completely decentralized, and that's what we can trust. Same for optimistic rollups. Though I can tell you, like one of the creator of the optimistic rollup, Mitis, I can tell you that it is a huge, huge challenge to actually build the system with this decentralized mindset, because it's hard to build, it's long, and it's not cheap, right? So, and these are the challenges. We could go the easy route, but because we have this decentralization also in mind, we go in and building and step by step, and we're going to get there. So this is my opinion, and it's not kind of like the competition. Again, all other chains, sub-chains, they find their own audience, and right now they have their own niche. It might evolve in the future, how it's going to be, doesn't matter. But right now we're comparing apples and oranges. We're comparing centralized databases with decentralized blockchains. So this is what it is about.
Mm-hmm. So I like that. So my mental model, I always sort of separate Bitcoin from everything else. Bitcoin's inherent nature to be very secure, very, not risky, right? Because it still is sort of the foundation of everything, and Bitcoin has never been an experimental platform, basically because, when we're dealing with cryptography, we've always got to think of adverse, what adversaries are going to do and what our risks are. And it's kind of an unfair fight because, you have to think of everything someone's going to do before they do it and protect yourself from it, right? So I always separate the cautiousness of the Bitcoin protocol from everything else for that reason. And I was always drawn in the early days to Ethereum because it could experiment and because we could take some chances, and it was a bit more of a not playground, but a bit more of a place where it was sort of okay to make a mistake, right? Because nobody knew, right? Nobody knows yet what is best and things like that. What I see almost organically happening is that you've got Ethereum now that led this sort of experimentation, but you've got other chains that are sort of plugging into it. So it's almost like a poor man's sharding to begin with. So it's already along the vision of how Ethereum was going to scale even a little while ago, right? So that, but not according to plan exactly, right? Not exactly according, but directionally true, right? Directionally sort of what people thought would happen in the early days. But I wonder, with Bitcoin being so cautious, right, on one end, but some development still happening. And with Ethereum having everyone else sort of leech off of its breakthroughs and understandings, and even in some cases its security, right? Does this create a world where Ethereum is like squeezed, right? Is there a squeeze, right? Or does that aspect of, it's decentralized and it has participants all over the world, will that just help it stay in the middle? It's either squeezed or it's the center, is I guess what I'm saying, right? It's the center of activity or it's getting squeezed. So how do you think about that? Is that an accurate assessment? Is that something that you think about?
I think with Ethereum, it's a part of the plan because Ethereum relies on the community a lot, right? So, and then bringing this community to build different scalable solutions. And I see like right now, we have tons of layer twos, and it's very, very exciting me that they are coming up. They all have different value propositions, different flavors, they perform differently. Some of them are centralized, some of them are decentralized, but all of them, so like all of us, I would say, we're going to go to the common goal, right? So we all help to scale Ethereum, right? So on the way, we can scale other blockchains too, like who knows? Because almost, I mean, I cannot say that almost everybody is EVM compatible now, but majority of people trying to be EVM compatible.
Even the ones that say they're not.
Exactly. So it tells something. It tells something. If they're trying to be EVM compatible, I mean that they're in that market too. Yes. So we all gonna go. All are going to the common goal, and this is part of the big Ethereum vision, and that's what Vitalik actually confirmed with the end game article as well. So that this is yes and cool, and the latest the EIP like it's 8844. The one that he did for the optimistic rollups. So now for the optimistic rollups, of course, transaction is going to be cheaper with this one. And so all part of the plan.
Mm-hmm. Great.
Seems like I'm guessing again. I don't know.
Yeah. I mean, there are. I don't think there are right answers, right? Mm-hmm. That's kind of what we're here to talk about. And you know, I continue to like anchor in on this idea that, you know, we've, as an industry, have figured out so many design questions, and the few questions that are remaining are the answers to the few design and engineering questions remaining are the pathway to the billion users a day and a billion active users doing all kinds of things. That's to me, you know, it's not just about brands signaling that they're using stuff and issuing stuff and getting into it. It's more that the capacity is there for all people to be able to transact. And that's where, you know, if those design decisions are solved, we'll be able to realize that world, you know, shortly. Mm-hmm. Now, Agna, what I'm wondering is, you know, the same idea, we have these design decisions, and it's a similar question to what I just asked. It is, you know, but a little bit different, right? Consumers are the ones making the decisions, right? So consumers are sort of flooding different blockchains. Now, it has a lot to do with price, right? It has a lot to do with fees. It has a lot to do with the simple choice. So they make a decision, and we start to see even developers. So to me, the greatest feature, I think what I just heard as well, the greatest feature of Ethereum is the nature of the developers all around the world, the number of them, like it dwarfs, I think, every other platform. I'm not sure, but my anecdotal understanding from both activity on GitHub and number of projects and etc., it is by far the largest supply of developers. But there's a lesson they're learning too, which is, you know, put your protocol on another chain because someone else will just copy it. It's sort of the inherent nature of open source technology regularly, that it can be copied and pasted and deployed elsewhere. So I guess the question is then, you know, Ethereum in the middle, right? Everything connecting to it. Users still, even if they're on other platforms, sort of making a choice. What do you see in that decision of users, right? What do the decisions of users have to look forward to be optimistic about Ethereum? And are there other reasons why they would switch, right? Are there reasons why they would be somewhere else?
Sure. So very interesting question, actually. And I was thinking, who is the user that we're talking about? Mm-hmm. Is it someone is buying a coin, expecting it to raise? Is it somebody is trading? Is it somebody doing DeFi? Is it yield farming? Most likely we're talking about these kind of users. These are the crypto users, really, more or less. But then the vision of Ethereum is going towards digital economy, right? So what is digital economy? It's transacting between each other. It's, you know, organizing yourselves in tribes. So we have DAOs right now. It's companies, which will not be companies called companies anymore. It will be decentralized, autonomous companies. And that is why I'm excited about what Metis is doing. So Metis is extending this vision of Ethereum by enabling for people to organize themselves and to actually have tools to do that. So if Elena could tell a little bit more about decentralized autonomous companies vision, which I actually tried it myself, and I will not announce it yet, but I think it's super exciting what anyone can do. You know, I can go right now on Metis, open my own decentralized company. I can invite people to stake with me. I can have a vision to do whatever I want. So this is freedom. Elena, can I invite you to say a few more words?
Oh, thank you, Angela. Yes, so this is, and that's why we built Metis in the first place, not only a layer 2 solution. So layer 2 solution came on the way because we couldn't do it on layer 1, honestly. So yes, that's why we built our own layer 2 in order to do what Agnes said, in order to give people the stage to build their own decentralized businesses the way they want. So this is something that is embedded into our tech, and we provided all the scalability for this project. So our projects are not in the one chain, they're not interfering with each other. So as soon as the new company, you can create the new one, you join, it will be the new chain rolled up for you inside Metis. And this is also the decentralized model, right? So we're not now, all the projects not depending on each other, they're on chain. Transactions are getting committed through the pool of sequencers. Full decentralization model is mandated, but now it's opened up the way for people who never used blockchain ever to actually come create a company and be right there on a blockchain with the whole community, leverage from all the projects, use their tech, use their dApps. We have right now on Metis, different developers are creating templates of the smart contracts that people can have no experience in creating smart contracts. They actually can reuse these templates in just one click of a button, right? So it creates the whole world of possibility. Plus, we can mix and match different business models. You can create your company with a membership. You can create the ownership. You can create nonprofits. You can create a charity. You can create pretty much anything, and you create the different levels: gold, silver. Sell it to different people, and this is all very scalable and right on the blockchain as well. So that is the beauty of what we're building in Metis right now, and we're very, very excited right now. And we're talking to now big Web2 companies. I'm going to let you in a little bit with the airlines, with the gaming companies that are very excited about that model. So more to come. But yeah, so we've been live for just a few weeks now. We're doing really well on L2Bit. You can see our stats and the TVL and everything. But yeah, come check us out at metis.io like Agne did, and you will not be disappointed.
Yeah, I like I think Agne put us on the right track here by mentioning about the user, because it's true that my mindset was still sort of stuck when I was asking that question about trader preference. And of course, traders just care about maker and taker fees, and they just want to get those down. But what you're saying is there's this whole other user profile that needs all these other dexterous tools. And I tend to agree with you, right? It goes sort of from, you can even see in the human capital that has come into blockchains from the start. Sort of the early time was the traders, because they were the first people to get it. It was the first sort of use case. And then you could see the artists and the NFT people come right when ERC 1171 came out. Then you had all these new folks that were, NFTs weren't new to anyone who was in Ethereum for years now. They were clearly coming. And so we already sort of see this whole vertical now that is mature and professional and running commercial scales. And I think what you're suggesting and anticipating is much more human coordination and sort of another layer coming in, another whole group of users. And if you get that human coordination, that's where you start impacting, like you said, Web2 companies and sort of, the companies that do need us as an industry to be able to handle 1 billion users transacting daily.
Exactly. So yeah. So first, so as you said, the first developer. So you had to be a developer to actually go and build something. Nowadays, it's still, even if you would like to create NFTs, you need to dig and through the information how to do it. People are doing it using different layer 2s because it's expensive on Ethereum. So there is this certain barrier. Yes, to lower that barrier, to give people access to log in with their username and password, but still going to be this is account on the blockchain, still create their own company on the blockchain, but just, clicking the buttons. This is something that we envision is going to kick the adoption.
And that's that let's say convergence of engineering, right? So once that blueprint is ready, once that blueprint has been proven, you're going to see people copy it. Is that what you're anticipating? Basically, get it right, and we can see how other blockchains interact with Ethereum. But as long as the first few examples of 1 billion users deployed using Ethereum scaling solutions are realized, then the ultimate prize for all the developers in all these incumbent companies are there, and they're going to say, that's what we're going to do.
Yes, and it's not only, but it's also inventing new business models that we don't even right now even think about, right? So people will think. It's just for us to provide them this infrastructure, kind of like a constructor to build from. So that is the purpose. But people, or I believe in people, they will make it work.
Yeah, and that was where I was limited when I first asked that question, because the idea was users being, in this case, traders, and they have only a certain set of interests, and of course cheap equals better, but that isn't the trade-off for any type of, or every type of group of people that can join. So hearing about DAOs and things like that, and the question is for you, Agnes, how can DAOs leverage some of these DEXs and other, I think Elena just briefly sort of hinted to it, that you can start a company and the company can transact and interact. How do those pieces work together in your mind?
So DAO, I think according to a definition, decentralized autonomous organization, let's me try to put the definition. It's a set of rules that is being coordinated in smart contracts. So everything is executed by the computer, right? And so obviously we have people at Decence that interact within each other. Maybe we have products, there's some sort of a business relationship going on, and everything is set not according to one guy, so one executive says that, but a smart contract sets out the rules, how it's being done. And also why DAOs are powerful is that they give the power of voice to all the DAO members. Or it could be not to all the DAO members. It could be to delegated DAO members. So to extend my thought, I want to open up another topic which we didn't touch: metaverse. So on metaverse, people will not come trade tokens. They will come to build real estate, buy land, open companies, marketing companies, everything that we see right now in the real world. This will go in metaverse. So how are we going to do this? Only through blockchain, only through layer 2, or maybe other layers, multi layers. So I think that we have to open up our vision a little bit more to understand where are we going. It's not only about the cheap fees. Of course, it's about accessibility. It's all about education, but we're going to another level of enabling, let's say, simple people to enter this digital world. Yeah.
Great. And so last thought for you, Elena, just on the idea of business models, because you guys have to anticipate these, right? You've got to, can't guess, you've got to leave it open enough to happen organically. But what do you see as an exciting way for these things to deploy that we'll know is a sign that we've reached another era?
Yeah, right now, again, we are having conversations with Web2 companies playing different ideas. Right now, one of the ideas was to involve the metaverse. And we're going to look at metaverse for the metaverse to pilot it on, to have a playground for people to build their own startups. Because in the modern world, it's kind of like very hard to build your own startup, especially from the beginning. So if you provided this infrastructure of that you build the company, and then using the hints from other teams, what you should do right now. You should develop your community, you should run this, you should do that and this, so people can actually start building their companies in the metaverse, and maybe that evolve into businesses. So this is like one of the ideas. There are like many other ideas. Web2 projects, they came to us to say like, oh, we would like to crowdfund some of the projects, how we can do so. This could be leveraged through, again, this decentralized autonomous company structure that are going to, query to the whole Ethereum ecosystem. So who would like to contribute into the project so can get the dividends or something like that. So many ideas are floating around. So we're going to keep you posted of what this is going to be. Of course, NFT, lots of ideas with the NFT usage of NFTs. You can distribute the rewards and the tickets and this and that using this business model. But yeah, it's very exciting constructor that we're building right now, and so I'm looking forward how it all evolves.
Wonderful, everyone. Well, that's the end of this session, team. Thanks so much for joining. I'm learning a lot today. It's great.
And thank you for being an awesome moderator, Nolan.
We're doing our best. We're doing our best. Thanks for your time, everyone. I'm going to be turning it over now to Alvin again, our next panel. So we've gone through sort of, our whole idea of how L1 and L2 will interact and help, design the future. We've spent a bit of time now discussing optimistic rollups. So here's the other one that we've heard a lot about, the ZK rollups, right? So it's not just about optimistic rollups. There is another part. So the next session is called 0 to 1. Will ZK rollups change the game for Ethereum? And you can notice my Canadianism by calling it ZK rollups, ZK rollups.
I noticed.
ZK rollups will change the game for Ethereum. Alvin, welcome.
Thank you, Nolan. And I love the energy of the previous panel. Thank you to Elena and Artner as well. Can I also invite Alex Gulkowski, the co-founder and CEO of Matter Labs, creators of ZKSync. I think he's in the room.
Hello.
Hello, Alex.
Hi, Alvin.
Thank you for coming. Really appreciate it. I know you're super busy. And so really appreciate you joining us. It's what a year has been for ZKSync and for Matter Labs. You raised $50 million with Andreessen Horowitz being the lead investor. You started to roll out on many projects that we're following. So could you tell us a bit more about yourself and how did you get involved in the blockchain world, and in a very succinct manner, explain to us about ZKSync.
Sure, really happy to do, and thank you for inviting me. It's an honor to be here, and I'm really happy to talk to your audience. And Matter Labs exists for 3 years now. We started the company with my co-founder with a very concrete purpose. We wanted to scale public permissionless blockchains such as Ethereum to the extent of the real world. And it was clear that scalability is going to be the bottleneck, and that zero knowledge proofs are like this incredible magic technology that has the potential back then to solve this problem. It was not clear exactly what protocol we were going to use because the protocol were not mature 3 years ago, but it was very clear that something is on the verge of happening, and we will it's going to be evolving into a direction that will transform everything. And this is indeed what happened. Over the last 3 years, there was an incredible race of advances in zero knowledge proof technology in cryptography in general, but specifically in the protocols that we use to scale Ethereum today. So I'm talking about Starks, the succinct zero knowledge arguments of knowledge, or like the more correct name for them would be proofs of computational integrity, where we can prove execution of very large array of computations, which can be succinctly verified.
Great. Earlier today we had Hasib, and he's also Dragonfly as one of the investors in ZKSync, and he kind of explained the idea of zero knowledge rollups and optimistic rollups and the whole, and how the way he put it was, we are just at the beginning, round number 1, and like everything is evolving so quickly. It's really exciting times. So could you share with us what are some of the uses of ZKSync today? I've been trying out some different projects that are using ZKSync, but could you explain what excites you right now today about ZKSync? What projects are using ZKSync? I saw that Argent just integrated Gitcoin and so on and so forth.
Yeah, so I will start by explaining that we have ZKSync version 1 currently live on mainnet, which you can only use for simple things like payments, trades, and minting NFTs. And this version is live for 1.5 years. So it's been integrated into a bunch of payments protocols, starting from Golem payments to storage to others. It was used by Gitcoin for the most of the past rounds, and it's being used in the current round of Gitcoin grants. We indeed integrated with Argent, and Argent is about to launch the mobile L2 first wallet version of their wallet with close to 250,000 subscribed users who are waiting on the wait list to join this wallet. So it's growing a lot, where we have a lot of integrations now with infrastructure providers and with exchanges. The ramp has been integrated, and you can on-ramp directly from fiat into crypto on ZKSync, and then with Argent you will be able to use normal DeFi protocols, just invest in Aave, put money into Compound, and so on and so on. But what we're most excited about is the version 2 of ZKSync, which is currently still being prepared for the testnet launch. We are currently having a closed testnet with close set of partners, and this is where we're going to introduce EVM compatible smart contracts for ZK in the context of ZK Rollups. So you will be able to take existing contracts, existing applications that are running on Ethereum on layer 1, and deploy them basically without modifications into a ZK rollup. And you're going to have really, really interesting properties, which we can talk about.
Great. That's super exciting. And you know, it's kind of like coming back to the title of this talk, which is 0 to 1. The famous, we're borrowing the term from Peter Thiel. So it's kind of like 0 to 1 when you have EVM compatibility and zero knowledge rollups. So that might change the game for ZKSync and for layer 2 scaling as well. So super excited to hear about that. Do you have a rough timeline, or like I know you've been asked the question before, like what when do you think that average users can start building on it and using it?
Well, the testnet is imminent. It's going to come really soon now. So everything is prepared. We are polishing the last details. But I just want to say that we're not thinking really in this near term. Everything we do at Meta Labs for ZKSync, we start with the end goal in mind. And the end goal is the mass adoption. So I think the reason ZK-based technology is actually 0 to 1 for blockchains is because it makes this ultimate reality possible, that everyone in the world can have affordable access to blockchain, and everything can be settled on a single, most secure settlement layer, which I think is going to be Ethereum, because of network effects and the philosophy of Ethereum, which we fully adhere to. But like, if you're starting to think about like how can we bring 1 billion people or 10 billion people to blockchains, you need to begin with technology which is infinitely scalable in terms of validation, without losing the properties of Ethereum. It would be easy to just put a very strong database centralized with a few servers or a few data centers and handle arbitrary number of transactions, but then you're going to kill the purpose of the blockchains, being the resilience and fully trustless security of the systems. But zero knowledge proofs give you this, because you rely on pure math, and you can aggregate infinite number of transactions into a single succinct proof of just a few kilobytes in size, which can be verified by a smart contract. It can be verified by your smartphone in like 30 milliseconds, and you can put together all of the world's financial and other transactions into this proof, and you can be sure that what you have here, the state, this commitment to the state is the reality, and then backed by Ethereum consensus. So it's like the main reality. So like this is what I'm incredibly excited about.
Yeah, I mean that sounds amazing and exciting. I wanted to probe you a little bit deeper, Alex, if you don't mind, because decentralization is like it's like a given. It's like a in Ethereum, that's like the major thing that people count on Ethereum for. The way Hasib put it was it's kind of like nation state level security. Whereas some people are quite happy with to put it bluntly, like just Binance smart chain level security, and is available right now. And so do you think that do you think that even with this amazing technology and its availability for use, there will be barriers to adoption because everyone's so used to like the current solutions that seem to work fine?
I think we'll see the UX so compelling on layer 2 that like for users, it will be like a very easy choice, just one click away to decide where they actually want to go. So you will be able to off-ramp directly from exchanges, on-ramp back to exchanges, transact, like move funds between different chains through bridges with varying degrees of security and UX, but like for small amounts, it will be like sort of instant in all directions. So eventually, it will be down to like what network has the strongest network effects, and the network that wins, or the like few chains that sort of participate in this winner takes most dynamic will be based on the most secure chain, simply because the biggest capital of the world, like like if you think of world's corporations, big organizations, institutions, they're not going to be putting their money on something centralized that is controlled by a single party, right? So like just from pure capital perspective, it's all going to be on the biggest network, which is probably going to be Ethereum network extended by rollups. And within this rollups, it's kind of clear that ZK rollups are going to be the broadest component in the very near future. So I think that all the optimistic rollups that exist today will either pivot to ZK at some point or will just be driven out of relevance. And then within ZK, it's like, we will have to see how things develop, but I don't see a slightest chance that like something else will be like more popular.
Those are very strong points of view. And I know that you mentioned UX, and I know that Huobi, OKX, a lot of them are providing ZKSync availability. So some people have the point of view that some people kind of are, obviously you hold the point of view that ZK rollouts will be like I think Vitalik also mentioned in that in the medium term, like ZK rollouts will win. But some other people, like obviously would foresee like like optimistic rollouts winning, or like in a multi rollup world, and with each serving different niches, and in parallel to layer ones, in parallel to the Ethereum mainnet. Do you see that happening?
I don't really see that happening for very simple reasons. For a very simple reason, like, everything optimistic rollups can do, you can do on a ZK rollup, but ZK rollups can do a lot more. So for example, EVM compatibility is now possible with ZK rollups. You will be able to take your contracts and just deploy ZK rollups. But then you can extend ZK rollups with something we call ZK Porter, or like valuation system, where you have users choosing the security type of their account between the rollup type and the Porter type. And those users who do not value security that much, but still want to be the part of the largest network, can opt into this ZK Porter account type and pay not the ZK rollup type fees of like $1 to $5 per transaction, but actually just a few cents per transaction. And they will still be able to participate in the same network, in the same ecosystem where all the super secret, like all the whales put their money in their roller-based protocols. Like the main Uniswap will be like single between those two different account types. So this is something that would not be possible with optimistic rollups, for example. And like, yeah, we clearly see that users have different preferences. So I expect most of the capital to reside on the rollup, and most of the users to reside on alternative shards, like let's call them shards for now, for simplicity, with data availability provided through other methods, not necessarily on Ethereum.
Cool. Yeah. So it's been a great year for ZKSync. What do you think that ZKSync ecosystem will look like in like in the end game, or like in the ideal state? And what do you see? What do you think? Can you share with us like a vision or like a picture?
Absolutely. So I think it will resemble Ethereum very much, because it will be Ethereum. Like to be on Ethereum will mean that you are on one of the ZK rollups. And for us, the ultimate priority, where we put most effort into, is to make sure that it remains fully decentralized and resilient and trustless and secure. So we want to decentralize the sequencer. We want to decentralize the proof generation. We want to make it essentially a protocol that has its own life, that does not depend on Matter Labs, the company, or on any other party, but is actually owned, controlled, and developed by the community. Just like Ethereum. You don't have a company that manages Ethereum, and we don't want to be the company that is behind ZKSync. Like, we created it, but we want to give it over to community and make it really resilient, so that we can scale to, like, imagine just Ethereum, but with throughput of like hundreds of thousands of transactions per second in different shards, and all interconnected, sharing the same trustless security. So that is the ultimate vision.
So theoretically, like with that number of TPS, with that we're gonna see new applications that don't exist on Ethereum currently, because it's cheaper gas fees, and that could theoretically lead to different whole new projects and products that we have never dreamed of.
I fully agree. I think that what the internet has done to information, blockchains, and Ethereum specifically, is going to do to the world of value. And what we see now is the emergence of this internet of value, where you cannot imagine the applications. Like 20 years ago, it was hard to imagine all of the different ways how we're going to use internet, and the same thing is happening now. So yeah, like, I'm really excited about all these things, and definitely computational powers that ZK technology is able to provide in a trustless manner are going to enable whole new classes of applications, from gaming to finance to like something entirely different.
Yep. I'm looking forward to it. Just like you mentioned, and part of the charisma of the Matter Labs team and the ZKSync team is your beliefs in freedom, and you have a famous tagline or headline: "Rely on math, not validators." So could you share a bit about the culture of ZKSync and Matter Labs, and like and what it's like inside the team?
Sure. Well, I'm really happy to do this, and we actually have a team handbook which we make every potential hire read first before they join. It's public. You can just Google it, Matter Labs Team Handbook, and then you can take a deeper look into how our culture, processes, and like work environment looks like. We're a remote first company. We all work from different places. We have the very result-oriented, ownership-oriented culture, where people are responsible for certain areas, and work autonomously or in small groups together to achieve certain results. And we're looking like it's very engineering-driven company, where we value good engineering. And on at least in the senior team, we expect every senior hire to also share the vision and the values.
Cool. And I guess part of that the decentralized aspect and is also closely tied to the idea of freedom. And I wanted to probe you a little bit, because L2B Piotr was saying earlier today that right now, even though the goals of the top teams in layer 2 are great and have great teams, right now we're still not quite there yet in terms of decentralization. Would you agree?
Absolutely. Clearly, we see that, like, you have to take a lot of compromises on the way if you want to move fast. But you really have to see where those compromises are being taken. So for us, we kind of sacrifice what we call liveness. So, like, there are some elements of centralization, and if you remove them, then the system is not going to be like operational to supporting ongoing transaction load. But we never compromise on decentralized security. So we build everything in such a way that you can always access your funds, no matter what happens. Even if we disappear, Matterless is compromised, you can always go on chain and retrieve the funds. So I know that different teams have like different degrees of like taking this decentralization approach seriously or prioritizing other things. But for us, it's really crucial.
Got it. So I'm going to I know that ZK Rollups is, ZK technology has been described as moon math, and you say rely on math, but to be honest, I don't really understand the math. So if you and I haven't had enough time to study it, so if you could give us a bit of an intuition of what the math is like, would that be possible to the kind of to the audience who are general interested members in the blockchain? Yeah,
for sure. Yeah, I can try to do it really quickly. So it's actually not as complicated as people think. It's like if you decompose the proof generation, or like how we construct zero knowledge proofs, how we build these trustless systems into simple steps, and you just follow every simple step from the previous one. At each step, if you have basic understanding of math, it's not going to be looking complicated to you. It just, we have many of those steps, and you really have to follow. You need to have like background and invest a lot of time to get it. And people who would be in a position to write good tutorials are currently all busy writing code and building the systems. But I'm sure that within a short period of time, we will see a lot of good popular explanations how it works. But in essence, which you're dealing with is polynomials. So you take your program, you represent the execution of the program as some numbers on an axis, and then you build a polynomial, and then you do a number of steps that yeah, that's a really good question. Like it's a little hard to explain succinctly where the magic is coming from, but I can try to prepare for the next time. It's like
no problem. Yeah, that was a tough question, because I'm just sharing, I guess I'm just speaking, I guess, for many people who are I think pretty intelligent observers, and like trying to understand the math, because it sounds like magic. It sounds like it's really promising, and like just to get a handle on the math would help us. So I should spend more time researching as well. But I've watched some of your videos, and you explained it at, for example, at FCC. Just saying, I'm just trying to get a more intuitive understanding for a mass audience. So a lot of good things happening. What are some of the biggest challenges that you face in increasing adoption of ZKSync? Like what things do you think about and try to overcome in terms of obstacles?
Well, we're growing the team, and one of the difficulties for us is to keep growing the team at the same pace as the interest of community is growing, and the pressure on us to ship is growing. But we're not willing to lower the bar of the engineers and leadership that we're inviting. So if you are a listener and you are a software engineer, especially with blockchain, smart contracts, Rust, please look at our webpage and apply. We're really happy to talk to you, especially if you are an engineering leader. We have a couple of key positions, such as head of engineering, head of product, and head of security. They're still open, and this is the right time to join us, like probably the best time. So please talk to us. All of that is advertised. So this is one big challenge. It's apart from that, we have really strong tailwind from the Ethereum community, from ZKSync community, which is growing. I would say that we are still heavily focused on delivering, not so much on communication and messaging, and it's all been growing organically. So I think that's the main challenge.
Got it. So you recently raised a round with Andreessen Horowitz and many other investors. So I think that's fantastic. Congratulations, and that's great validation of your work and and your focus. What do you see that mostly going into, like building out the team, and what else do you see that going into?
Absolutely. So the first primary goal of the spendings for this round is to hire the world-class team, and so now we're not bound to geographic region anymore. We can hire people from different places, and we only want to go for the top talent. And of course, in the current market, the engineers are expensive, and inflation is coming, so you need a little bigger war chest to be able to sustain it.
Yeah, I hear you on that, Alex. I wanted to spend, we have about like 3 to 4 minutes left. I wanted to spend a bit of time on a bit more personal side, if you don't mind, whatever you're willing to share, because I've been following your Twitter account, and I know that you're a man of strong views, and you believe in freedom, you believe in, you're a big supporter of Ethereum. What does Ethereum mean to you? That's question number one. Why is it important? And number two is, can you share with us a bit more about what a day in the life of Alex is like?
Well, right now it's a lot of work, lots of things going on throughout the day, and then yeah, but I have to work like almost entire time right now. What Ethereum means to me is I think this is what kind of Bitcoin was called to solve. I learned about Bitcoin in 2014 or 13, late 13. And I thought it's gonna be this technology that finally gives us like technological ability to change the power structure of the society, to empower people, to give every individual more, some very tangible tools to protect their rights and protect their freedoms. But Bitcoin really does this only in a very narrow field with regard to money, sound money, like maybe store of value. Maybe it works, maybe not, but Ethereum extends it to like everything you do in digital economy. And I could not have foreseen the rise of NFTs, for example, but like the more I think about it, the more incredible it looks to me, because you can represent, you can use it as a social coordination mechanism in so many subtle ways. So like for me, Ethereum is a representation, is like the incarnation of this technological revolution of freedom, which is gonna put humanity much farther on our evolution and progress.
Yeah, I love the kind of like the ideological and the vision behind. It's very clear from the communications. I guess we have a couple more minutes. If you have anything to add, and Nolan,
I would jump in and just I was also, when I heard about the freedom piece, Alex, I went and checked the Twitter, and I saw some good Scott Adams material there. I see you retweeted him just now, and so definitely a new resource for me. I followed you instantly. So anyone who's going to be tweeting about freedom stuff, I've definitely got time in my timeline for them. So great, thanks for making it here, and thanks for bringing that voice to Ethereum. I spend a lot of time with the Bitcoin community, and you don't need anyone to beat that drum around those guys. So that's always good to hear. And I'll just add one I guess frame that might be helpful for you. When you just mentioned, it was one of the last thoughts, you said you didn't see NFTs coming. I don't think there was any it wasn't a logical thing. The system I use is just looking for the human capital that is leaving established industries to go into crypto. So you saw it with the early developers, the cryptographers. They were like, yeah, sure, I'm going there right away, right? Because they were sick of being a side footnote in their businesses, and no one listened to them, and it didn't matter. That was just a thing. And then the traders start to come because they realize this thing is tradable. And so right away you get the Wall Street human capital. I saw Chad Cascarilla yesterday testifying in the US Congress. He was mining Bitcoins as a semi out of work hedge fund guy after the financial meltdown, right? He thought it was over at 10 cents Bitcoin because he was mining it out of his free electricity hedge fund office, right? So you get a lot of folks who did that. And then for me, the NFT piece, it was just, I saw artists leaving right when the CryptoKitties thing started. And I said, well, that's next. You know what I mean? We can do content, we can do an event because they're all there. So, you know, look out for that if it's helpful for you at all. You know, when you see the human capital peeling over, usually ready to go.
So to me, it feels like the next wave could be maybe around science.
Well, yeah, I mean, exactly. Like I'm a big believer in social tokens now, just because I start to see individuals seeing that it's obvious, right? And you can see people go over, and I continue to believe that the NFTs are a subcategory of social tokens. Not everyone agrees with that. I just think that once people start issuing social tokens and we see the scale, NFTs are going to be another thing that's released as part of, you know, because I see with what Friends with Benefits did, FWB, and what the folks over with Whale Vault did. Whale Vault looks an awful lot like an exchange traded fund, right? Like if you knew, you see the assets, you see what they're issuing, and all of a sudden, that's what hedge funds want to share, right, with LPs and stuff like that. It's not that different. It's access, it's all that kind of stuff. So yes, your instincts are correct as far as I can tell, you know.
Yeah. So Alex, do you have anything else you wanted to add before to like the audience, you know, like both recorded and live audience about ZKSync, about Ethereum? Like any final words you want to share?
So just want to repeat my appeal to people who are interested in supporting us to look at the jobs at Rollups, because we're hiring very actively, and we'll be really happy to talk to any folks who want to work on increasing quartz freedom and on these amazing technologies.
Great. Thank you so much, Alex. It's been a pleasure, and thank you for your work.
Thank you, Alvin. Thank you, Nolan. It's been a pleasure talking to you here.
See you, Alex. Great, Alvin. Heck of an agenda you put together here, and as a semi-proxy member of the audience, you know, in a sense, because I've been here listening to all the content and seeing your vision play out. It's been interesting. I think you set this up right, and I think we saw that, you know, there's a reason to discuss the wider pieces around Ethereum scaling, and then a few of these specific pieces. So, you know, so far I've found it to be definitely a few angles I didn't see before, and even someone who follows it every day, I found some insight here.
Yeah, thank you, Nolan. I've been really enjoying the panels. I think two things. One is the insights and angles that I haven't seen before, and the other one is the energy. I think that I really like people in the blockchain space and Ethereum space because of the energy and like the sense of possibility, and also like the hard work, because it's not something that's easy to explain to mom, right? Mm-hmm. It's like it's hard work, and it's not easy to explain like what you're doing. Yeah,
and not easy to explain. I think you know, we have a little more for you today, and I think the not easy to explain part is somewhat satisfied by that, because we have some real hands-on practical stuff coming. You know, I tend to think that, you know, especially with blockchains, you know, we've spent so much time explaining things and talking things over, and you know, it's a little bit like the allegory of the cave. You know, we're seeing these shadows, and we're trying to, you know, formulate narratives and pictures and bring those things into reality, in a sense. But we've got one more guest today, don't we, Alvin, who is going to help us picture this stuff a lot better and in a more practical sense, so not as theoretical.
Actually, we have a special session right now. We're super privileged to have Stephen Goldfeder, the co-founder and CEO of Off-Chain Labs, and also like one of the creators of Arbitrum. So happy to see you. Thank you for taking the time. We know you're super busy, and it's been a great year for you, and we'll love to go dive deep into practical aspects of what's going on in Ethereum Layer 2.
Thanks very much for having me. Yeah, excited to do that, and excited to be here.
Yeah. So Nola, I'm going to take it from here, and like really, like this is an honor for us, like dive deeper and like a special session one-on-one with Stephen. So Stephen, could you tell us before we begin? We have some more technical audience, also a very general audience. Can you tell us a little bit about yourself and about the founding story of Arbitrum, which is a very interesting story, as we know. Hasib mentioned broadly what Optimus rollups are, what ZK rollups are. I think we have the basic background, but maybe you could share your particular story and the kind of like the founding story.
Sure, happy to. So the story goes back quite a while ago, actually. So, well, my story personally, I got involved in the blockchain space in about 2013. And that was initially in Bitcoin, and I was a PhD student at Princeton, and through the years got more involved in Ethereum and smart contracts, and particularly scaling smart contracts. When Arbitrum was first envisioned, though, that was by Ed Felton, my co-founder, who was a longtime professor at Princeton. And probably 2013 or 2014 was when Ed initially had the Arbitrum idea. And the first, actually, if you look online on YouTube, and you search Arbitrum, the first instance you'll find mention of Arbitrum was a fall 2014 class project at Princeton, which Ed mentored. This is the Princeton blockchain seminar, and Ed was mentoring this project. And it was a project called Arbitrum. And you'll find this video was posted at the end of the semester from January 2015. And the reason why that date is really, really fascinating, I like to say it a lot, is because that's 6 months before the Ethereum launch in July of that year. So, Ed's been thinking about scaling Ethereum and scaling smart contracts for a very, very long time, really. And of course, so the history is Ed went off to the White House. He was a senior advisor to President Obama and deputy CTO of the US. And when he came back in 2017, that's when I got involved in the project, and together with Harry, who fast forward would become my third co-founder of Off-Chain Labs, we began building out Arbitrum in an academic context. We published a paper, and then it was clear to us once we wrote the research paper that our work wasn't done. It actually had barely begun, that we had this idea of scaling smart contracts, and we really wanted to build this out. And then we formed a company and said, how do we take this work to production? And from the earliest days of the company, even before the company, it was always clear to us that where are we building? We're building this. Well, now there's something called Ethereum, which is the dominant smart contract platform. So we'll be building this on Ethereum and be a layer 2 on Ethereum. The word rollup didn't exist back then. So we had to sort of, people would say, so what are you building? A scaling solution. They'd say, okay, is that a plasma? We say, no, it's not. Okay, so it must be a state channel. No, not exactly. And then we say it's just Arbitrum. And then, thankfully the vocabulary developed along, over the next several months and years. And now there's a good description of what we do and what others similar to us are doing. And, that's the basic story of how we sort of got started. And one thing that was really, really, really important to us from the earliest days of the company as well was the EVM compatibility, to have this experience which says, the principle is if your code runs on Ethereum, it will run on Arbitrum. If your code doesn't run on Ethereum, it may still run on Arbitrum because you get rid of a bunch of those limitations, particularly around the contract size limit. But the idea is that we want it to be as compatible as possible. And I think that's what we've seen today. And, we're thankful to working with hundreds of projects that are deploying on Arbitrum. And, a lot of that is because they already know the tools, right? They can use the same EVM and compatible tooling that they're using now, the same block explorer that's on Ethereum, the same node providers, all of that works with Arbitrum as well. So that was something that was really important to us. And then there was a lot of building to do, and there's still a lot of building to do. We're 3.5 years into the company. We're about 3 months into our public mainnet launch. And I'm still convinced that this is only the very, very beginning. And we're excited to be here, but we still have our work cut out for us to continue delivering low-cost transactions to users, lowering those costs, and also increasing the capacity so we can support the next billion users that are coming, because I'm convinced that they're coming.
Yep. I remember looking at that video, 2015. I think it was a Bitcoin seminar at Princeton, not even an Ethereum seminar because it was that early. And and earlier today, I just actually gave a very small sneak preview of the DGate protocol built on Arbitrum, and we're one of the hundreds of projects that are working in the Arbitrum One system, and is working great. So thank you for working hard all through the years where even before before Rollups became a thing, and you're obviously you are one of the founders of this whole layer 2 system and movement. So I know that Arbitrum is the largest layer 2 blockchain by TVL, like more than $2 billion, according to layer 2 Beat, L2 Beat. And it was and they won the earlier panel. So big congratulations to you. What do you think it has helped you to get to this leadership position?
Yeah, thanks. And I appreciate it. And I think it's, it's the TVL, I think, is an important statistic for sure. But also I think the thing that helped us get there is really the projects that we're building within the ecosystem, right? So it's not only TVL, but it's meaningful TVL. It's in projects. It's in, a lot of it's in ETH, but it's like, in DeFi projects or in NFT projects, and the value is really, and that's what's driving the value. So it's really, so I think the value is the output, but the thing that we're really doing and really excited about is, boosting the ecosystem and working with companies and excited to have, how do we get more and more people to build an Arbitrum? We have, a really strong number of DeFi projects and NFT projects, and say, hey, what's next? And how can we get them to build an Arbitrum? New sort of categories coming to the blockchain. We have Reddit, of course, that's building on an Arbitrum deployment. And we have, and then the question is the infrastructure, right? Because the dApps are super important, and that brings users, but users also want their infrastructure. So you have Etherscan, like I mentioned, you have Infura, you have Alchemy, and other node providers like Anchor as well, that I mentioned. And then you have, and then the question is, what else? And then it's like, well, we need centralized exchanges, on-ramps and off-ramps. And of course, really exciting for us is that Binance enabled deposits directly from Arbitrum. So yeah, I think it's really, really about coordinating an ecosystem. And the TVL is an important metric, but it's there's nothing that I can do on my during my day. And I don't sit down and ask the question of how can I get Arbitrum TVL up. I sit down and say the question is, how can I get more people building on Arbitrum and excited about Arbitrum? And that's two parts. One, it's educating people about what we already do. And so like if anyone out there today and you're looking for a solution, a layer 2 scaling solution that can have Ethereum security and also give you EVM compatibility and really fast transactions, like come try Arbitrum. And it's also listening to feedback and saying, hey, you've built an Arbitrum, what's working for you? What do you need? And really trying to foster the community in that way. So that's what we focus on. And the TVL is a nice validation, when we see that value, okay, so there's real value here. And there are projects that are doing really, really well in Arbitrum. That's super, super exciting. But I think that, we try to drive that by just building the ecosystem, and then hopefully, and the TVL just keeps up with that.
Yeah, I want. Thank you for that, Stephen. I wanted to ask you more, probe you a bit deeper on a fun question. So, what are some of the surprising projects that you've seen on Arbitrum that you say, hey, that's neat or that's cool?
It's a great question. So the projects that I guess excite me the most are I guess there are two answers. So one of the projects that excite me the most are really the ones that you couldn't do on Ethereum, right? Because they were sort of priced out. And examples of these on Arbitrum is trading apps that are allowing users to do much lower value trades than they would on Ethereum, right? So if the fees are much lower, right? If you want to trade $10 or even $100, but your fees are going to be tens of dollars, it doesn't really always make sense to do that trade. But an Arbitrum with the fees much lower, it enables. So that's not necessarily a new type of application, but it's a new usage for an application that already exists, right? It lowers the floor and really brings in a whole new world of users, because that's really what we're about. We want to be inclusive to everyone, and lowering fees allows us to be inclusive of all more types of users, and also more types of applications as well. So gaming is another one that I'm really excited about. Some really cool projects that some of them aren't announced yet, but some good announcements coming soon about really cool gaming experiences on Arbitrum. And that's something also which, if you're playing a game but getting charged, every time you interact tens of dollars, it's kind of difficult for most users to play that game. So it doesn't really make sense. I think that's why we haven't really seen so much gaming happening on, say, Ethereum, because the price point just doesn't make sense for users. And also you want a faster experience. So seeing that on Arbitrum is really, it's really exciting for me, and one of the things I'm most excited about. And the other thing I'll say is is projects like, I love when I learn about a project in Arbitrum on Twitter. Like that, it makes me like so happy. I mean, it makes me, I often ask, well, I wish we were in contact with them so we could be helping them. But often it's like, it just really proves the point of the ecosystem, and that this is an open ecosystem, Arbitrum. You don't need my permission or anyone's permission to deploy an Arbitrum. And, seeing these projects launch that I don't even know, I've never heard of them before. I don't know who's behind them necessarily, or sometimes I do, sometimes I don't. But learning from Twitter really gets me excited, because just, what we're trying to do here is really open up the ecosystem for everyone. If that's the whole point of this whole industry, is remove the barriers and allow people to innovate more quickly. And seeing that actually happen, where there's I'm learning on Twitter, and that fast pace is really, really exciting for me.
So the best surprising projects are the ones that you see on Twitter, and you're excited about gaming. I wanted to touch a bit about. Yeah, go ahead.
I'm also excited about the projects we're in touch with. I just mean, so I shouldn't. Yeah,
I don't mean that. Sorry, I don't mean that. The only ones.
I mean, no, not you. I'm saying, in case I was unclear, I'm also absolutely excited there. But I just mean that it's exciting for the development of the ecosystem to we're at the point where I learned about things on Twitter. But obviously we're excited.
Yeah, I get it. I totally get it. I'm happy that I see all the projects that are on Twitter that are on building on Arbitrum, and it's just amazing what happens. And I remember the first Arbitrum 1 launch, and we were so excited. We were on it, and now it's become within a few months it's become a whole blossoming ecosystem. And I want to touch on one point, which is that recently there was a whole fees debate, and the abandoning Ethereum because the fees were too high debate. And what are we talking about when Arbitrum is right here? And I know that Vitalik gave a shout out to Arbitrum in the Discord, and also said that, hey, congrats on the Binance and congrats on everything. And clearly the Ethereum ecosystem is behind you. And we're thriving, and we're blossoming. Yeah.
Absolutely. And it's really, really, it's exciting for us to be here. And we definitely, Ethereum definitely has not given up on its users. We're building, and it's a process, right? So today, Arbitrum is live. We're about 90% cheaper than Ethereum. And that's not the end game, right? So I think, in the coming weeks to months, we'll cut that in half again, at least. And, we're going to, constantly, strive to do as low as we can, but without compromising on our principles, right? We want to get the security of Ethereum. So we really, really want to constantly, re-examine what we're doing and say, how can we make it better? But definitely the exciting part is we're able to deliver along the way, right? We're not saying, we're not going to launch until we're 99% cheaper than Ethereum. We're saying, hey, Arbitrum is 90% cheaper than Ethereum today, and come use that. And is that enough for you? Maybe it is, maybe it's not. And we're going to continually improve that, but improve that in a way where the project's already live. And Arbitrum Nitro is a big upgrade that's coming soon that will help us get a lot of those gains. But most importantly, we're doing this in a way that your average user will be completely the only reason they'll have to be aware is because their fees will go down, right? But they won't have an interruption. So it should be a really smooth experience for users. And that's sort of, what we're excited about, is delivering scalability today and making it better, but not making users wait to experience the gains that we can already give them.
Yeah, could you share a bit more about, you mentioned Arbitrum Nitro. Could you give us a quick, for the general audience, a quick, what is it and what it means for them?
Absolutely. So to a general audience, the technology is really, really cool. And for those interested, I encourage you to read our blog post a little more, and we'll be saying more about it. To a general audience, the things that you'll notice are, number one is the fees will go down very meaningfully, estimate by about 50% of what they are today, more or less for certain workloads, but it's a good estimate. And also right now we're throttling Arbitrum capacity. So we will be able to remove a lot of that throttling and really help us usher in these next billion users that I mentioned will help us get there and really increase our capacity significantly. So the experience will stay the same. The fast transactions, the instant transactions you have in Arbitrum, that'll be the same. If you'll launch an app in Arbitrum today, It will still work post Nitro. You'll just have lower fees. So it should be an overall very, very positive experience. In a sentence or two, what the tech is doing is replacing some of the internals. You can think of it as a car where we're picking up the hood and swapping the engine, but the car will remain, working as it is. So we're changing some internals of how we do and using some other parts and some parts that are also more closely aligned with Ethereum. And the last thing that users might notice is Arbitrum is really, really compatible with Ethereum today. There are some like developer tools that rely on sort of the internals of Ethereum, like things that hook into under the hood that are not supported. But with Arbitrum Nitro, all of that will be supported as well. And the system will be fully functional and secure from day one. We'll never launch a system without fraud proofs, for example. So our proofs will be live and from day one, and the user experience should be only get better, strictly better experience.
Great. So I wanted to dive into like a couple of things that were mentioned earlier today. One is that L2Beat. I think there was a report that came up from L2Beat today about how Arbitrum has been very open and very transparent about decentralization and the path towards decentralization. And the other one is about like how we're early towards the moving towards the end game. That's what Haseeb said. We're just early. Optimistic rollups, ZK rollups, like everyone's kind of like early in the game. So to the first question, what are your plans for decentralization? And we know that you've been super frank and straightforward about it, but like could you share with us like what's kind of like the plans towards increasing decentralization? And the other one is like where do you see the end game?
Yeah, both really great questions. To take the first one, what are our plans on decentralization? Our plans are to decentralize the protocol, of course, and that has to happen at a point where. So concretely, what does that mean? Right now, for example, we have our sequencer. Our sequencer is run as a single party, but we will decentralize the sequencer using a sort of fair consensus protocol. And to minimize the jargon, what that means is that basically right now, when you submit a transaction to Arbitrum, you submit it to us. You also can submit it on chain. They have a backup mechanism, but the average user looking for the best experience will submit it to us. Going forward, we'll have a committee that you can basically, a decentralized committee that you submit it to, but we'll also give you very strong guarantees, because the things that you want in a sequencer is that they can't manipulate the order of transactions, right? Because as we know, you can minor extractable value, or MEV, is something that users, if you can manipulate order, you can really extract a lot of value from users. Today, we're not doing any of that. So you're submitting your transactions to us and you have our word that we're not reordering anything, and we're not. But we want to give users a decentralized, more, a better guarantee, not one that says, hey, trust me, but it's a guarantee that says, hey, and again, this is not for the security of the system. This is strictly for the ordering of transactions. We want to give users a better guarantee. So that's one strong point of decentralization that we'll be launching soon. And actually, there was an interesting blog post from Chainlink today. You can look at their blog where they posted about some of the work that we're doing together to get to this point of decentralize the sequencer. I encourage everyone to read that blog post. If you haven't, you can find it on Chainlink Medium, Chainlink blog. And to your second question, what is the end game? I think the end game, for as I believe it is for Ethereum scaling, is optimistic rollups. There is a narrative that some people are putting out that ZK rollups will get you a much cheaper transactions, but that's not really true. Optimistic rollups have some really, really significant cost benefits over ZK rollups, and there are of course trade-offs at different paces. But I think when it comes to share cost, fundamentally ZK systems are proving validity. So they're actively proving all over every time they're proving. Optimistic systems just don't have that cost. We don't have to prove, and that proving cost is high. It's roughly, it's orders of magnitude more expensive because their proving cost requires you to do elliptic curve operations. So I think fundamentally, optimistic rollups are going to be the scalable solution long term. And there was a really interesting, speaking about the L2Beat folks, Bartek from L2Beat put out actually a thread on this point today, in more detailed about the benefits of optimistic rollup for ZK rollup. And again, there are trade-offs all over the place, but I think that the correct trade-off is optimistic rollups. And then, I also think I should say that technology will develop over the next 5 years. So will Arbitrum today look like Arbitrum in 5 years? Most likely it will have many, many differences, but that's true for any product. The ZK rollups of today won't look like the ZK rollups of 5 years. So you shouldn't confuse what I'm saying of like, I think optimistic rollups are the end game with saying, I think Arbitrum today is in its final state. I think we have a lot more to go, and we have a lot more research to do as an industry, no matter what you pick, what your solution of choice is. But I do think there are some fundamental benefits of optimistic systems. And optimistic systems have existed in the literature for decades. Nothing to do with rollups. And the idea is simple. Take your favorite ZK rollup system, and I'll say to you, hey, just don't publish the proofs, right? So don't publish the proofs. Don't do the proving, right? That's going to be a lower cost to operate system. And particularly if you already have people running nodes, or be running nodes anyway, they can do the verification for the optimistic system, it will be a win. So that's where I believe will be sort of the end game of the scaling. But again, we all have a lot of work to do, because I don't think we're definitely not in our final state. I don't think we'll ever be in our final state, right? Ethereum's not in its final state. I don't think we'll ever be. So
yeah. Great. And I follow your Twitter, and I saw some of the threads about optimistic rollups and ZK rollups and the balance that you have. I wanted to touch a bit more as we get into the end. One question is that you raised $120 million recently from Lightspeed and from many other people. That's great validation for you. You've been working in this space really hard for a long time. Two questions. At the beginning, when you were at Princeton, what was it that made you think, hey, this is it, and that you really want to work on it? And the second question is, what does this recent funding round mean for off-chain labs, and what do you plan to do to expand and to go forward?
Great questions. At Princeton, I was fortunate to work on a lot of really, really interesting projects, and actually some of my work has made its way into other companies as well. For example, some of there's a really great company called Fireblocks, and doing secure digital assets. And a lot of the early work on Threshold DCDSA that led to that was work that I had been involved with, but never in a commercial setting. And for Arbitrum, it was really it was something that was just very, very, very exciting. I had done a lot of work on sort of building primitives or not analyzing systems, but really, or building lower level primitives. But the idea of really building a product that we can deliver to users that's going to be so meaningful was very, very exciting. And, it's something that's pervasive and used by many, many people. And also, frankly, we wanted to do it ourselves, right? To the point that I said a few minutes ago, which is the Arbitrum today will not look like the Arbitrum in 5 years from now. If we look back, the same thing holds, right? Arbitrum today looks very, very different from the Arbitrum that we have published at Princeton. And there are many similarities, but we have years more work behind us. So we just sort of didn't want to let go, right? We didn't want to, say, okay, we did this, because that wasn't the final form to us. We wanted to continue along the research and continue along building and delivering that to users. So that's basically, how it was just, and I never actually, sat down one day and said, all right, this is it, but it sort of just happened. I got more and more, we all got more and more excited about it, and there was just such a rich problem space here to focus on. So it sort of just happened over time. I don't think, Ed, my co-founder, looking back, Ed was a professor at Princeton for 28 years. I don't think, he didn't sit down one day and said, okay, I'm going to do this Arbitrum full time. And I think it just happened over time, where it got more and more exciting and just, really drew us in. And obviously I'm super happy about that it did. And to your second question about the fundraising, fortunate to be backed by some really, really great funds and great people in the space. And, the most important thing that we need to do with that money is build the best team possible, because the bottleneck here for us delivering is not ideas. It's really excellent people to help us build out those ideas, and those are engineers, but it's also business folks and finance folks, and really folks all along. All along the largest number of openings we have is definitely engineering. We have openings everywhere. So. To anyone listening today, if that sounds interesting, definitely please feel free to apply to us You can find your job applications at offchainlabs.com, and you can also just DM me on Twitter or something, and we'll take it from there. But yeah, we're definitely the largest expense that we have, and the largest expense that we hope to have is increasing payroll to really build the best team possible.
Yeah, I think that that's the best way to end it, right? Is on like, do you have anything else to add? I think that the adding on like the point of asking for great talented people to join you, like that's any last things you want to add to the audience?
No, I think that I'm happy to end there. Feel free to reach out, and again, thanks Alvin, and thanks to the larger Degate and CoinDesk teams for hosting this. Really happy to be here, and thanks for having me.
Yeah, I just wanted to thank Stephen. You've been working on Ethereum and Arbitrum for a long time, and it wasn't and to this year's great news. It's just a combination of so many years of work and hard work that you've been putting in, and we have great respect for the Arbitrum team and like the kind of pioneering things that you're doing. So really thank you for coming and taking the time.
And definitely appreciate that, and thank you.
Take care. Yeah.
Bye. Thanks.
So I guess that's it. Ladies and gentlemen, thank you so much for joining us. I hope that you've learned a bit about what Ethereum Layer 2 is and why we think it's the future and why we think that Layer 2 will change the game for Ethereum. Highly encourage you to read more and to find out more and to try out the many Layer 2 solutions out there. Thank you. Have a good day, night ahead.